In this video, I will be speaking about the USD CAD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect of this market, and by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting from the monthly time frame, what we can see is that we have a market which has just created a very strong impulse to the upside, followed by this correction. Now, in general, after an impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse. And if we do that, we can see how the market has just recreated a perfect correction to that zone, which is in between the 50% and 0.618 of the Fibonacci taken on this monthly impulse, which is a quite strong level of monthly demand and support, which we did in fact expect the market to test and then potentially to reject to the upside, which is exactly what the market is currently doing. Dropping down on the weekly, we can see how from a weekly perspective, during all this move to the upside, there is one candle not related to the move, which is exactly this red candle here. This shows that during the strong move to the upside, anyway, the market reacted to this zone and found resistance at it. And after the break to the upside, which we have now experienced, this previous resistance is now turned support. So essentially, the level that the market is currently testing is a quite strong zone of previous weekly resistance, which is now turned support at this area from which we could expect a potential rejection to the upside. It is also important to point out that since we have an impulse, if we want to measure the correction, we have to take our Fibonacci from the low to the high of the impulse. And if we do that, we can see how the market has just retraced exactly to the 0.618 of the Fibonacci taken on the impulse, from which a potential rejection to the upside becomes even more possible, because this means that essentially we have confluence of support at this area given by both the previous weekly resistance turn support with that 0.618. Going down on the daily, what do we see? Now, from a daily perspective, it seems like this horizontal movement of the market is in accumulation phase before then getting a potential rejection higher. Obviously, there is no confirmation yet. However, it is also quite clear that if we look at the structure, this is also previous daily resistance turn support, which increases the probabilities of a potential rejection higher. Also here on the daily, since we have this impulse, if we want to measure the correction, we have to take our Fibonacci from the low to the high of the impulse, showing how at the moment the market is testing that zone in between the 0.618 and 0.786. CAD weaker, and a weak CAD means a strong USD CAD, and we can see in fact how, if we zoom out, the market has lately been trending to the upside. So there is definitely the possibility for a potential rejection to the upside away from this zone. So how we could be approaching a move like this. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing, potentially also with students, is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries, at that point we could be looking for a potential rejection to the upside for the market to complete the impulse correction and impulse pattern to the upside that we have previously identified from a weekly perspective. And if you enjoyed this free analysis education and update, make sure that you drop a like and a comment. It really does support the creation of more free analysis education and updates for all of you, and I will see you in my next breakdown.